Hi there and a good late morning. I'm Holly and you're watching The Opening Bell, live from Kalkine Studio in Sydney. Given the rollercoaster month amid commodity and crypto volatility, sinusoidal equity market trends, inflation, as well as rate hike expectations and now virus woes, market players are closing with their eyes on the last ASX trade of the month. With that in mind, let's zero in on how the Australian market charter is panning out today. The ASX 200 traded above 0.8% in the initial few minutes of trading on the backdrop of a strong overnight session on Wall Street, as gains made in the frontline technology shares propelled the S&P 500 and Nasdaq Composite to record highs. Meanwhile, global equity markets edged lower on Tuesday due to the rising cases of coronavirus in Asia. Investors also speculated whether the US Federal Reserve would extend its timetable to end its monetary policy. Looking at the market open trades, the top performing stocks in this index are Iluka Resources and Telstra Corp. Telstra's Towers deal and intended capital return buoyed the shares. Plus, mining players are catching attention as well, with South32 and Minerals Resources both trading higher. But not everyone's winning. Just ask Nuix, the top loser thanks to ASX investigation into the company's former CFO Stephen Doyle and his family, who've been accused of insider trading. Meanwhile, AGL Energy is also on the losers' bench, although for a different reason, and that is the aftermath of confirming a demerger of their retailing business. But before we jump to the ASX charter for today in detail, let's have a look at the last US market performance. The S&P 500 marked a record high for the fourth consecutive session overnight, supported by technology and banking shares. The rally was also buoyed by a government survey that revealed US consumer confidence in June hit its highest since the onset of the pandemic. And on Wall Street, the Dow Jones was up 0.03%, while the S&P 500 also gained 0.03%. And on top of that, the Nasdaq Composite added a very solid 0.19%. Fear over the highly contagious Delta variant is becoming a global worry and denting investors' sentiment, which had already been shaken by the Fed's hawkish hit this month. Indonesia is witnessing a record high number of cases, while Malaysia has planned to extend its lockdown and Thailand has announced newer restrictions. In Southern Europe, Portugal and Spain are restricting travel for unvaccinated British travellers. Now to talk employment, investors may want to keep an eye on the US jobs report for June this year, which can determine the market momentum going forth. According to a poll by Reuters, economists expect the addition of 690,000 jobs this month, up from 559 in May. The US Treasury yields remained in a range as the market participants waited to see how that key US employment data due on Friday might affect the Fed's monetary policy stance. The benchmark 10-year yield, which rose as high as 1.51% during Tuesday's session, last traded flat at 1.48%. And onto the currency space, the US dollar rose to a one-week high, registering its largest single-day gain in about 2 weeks, as surging cases of the new Delta variant threatened to derail the global economic recovery we were heading towards. Keeping in mind that when investors lose confidence in the equity markets, they generally tend to move to the US dollar as a safe haven. Meanwhile, the Australian and New Zealand dollars extended losses on Tuesday after cautious investors cut down on risk amid concerns over rising COVID case numbers, which led to a strengthening of the greenback. And now it is time for a short break, but stay with us and I'll be back with more trending updates for the Australian market.
Hi, This is Andy Lou broadcasting from Kalkine Media Studio in Australia, and I'll be hosting the new Kalkine Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to Kalkine TV and join me.
Welcome back, I'm your Holly, live from Kalkine Studio in Sydney, and you're watching The Opening Bell. Now that we've taken a glimpse at the US market performance, let's look at the major newsmakers in the Australian share market. To kick things off, Telstra inched higher on selling a 49% stake in the Towers business. The telecom giant has sold the interest in its Telstra Intraco Towers business to a consortium of Futures Fund, Commonwealth Superannuation Corporation and Sun Super. Telstra said it expected to receive net cash proceeds after the transaction costs of $2.8 billion, 50% of which would be returned to the shareholders at the completion of the transaction in the first quarter of the 2022 financial year. Then the next newsmaker worth looking at is AGL Energy, which slid on confirming a demerger of their retailing business. AGL has been primarily involved in both the generation and retailing of electricity and gas for residential and commercial purposes. The company has announced that it will change its name to Accel Energy and demerge its retailing business, AGL Australia, into a separate entity in the fourth quarter of the financial year 2022. As per the company, the split will see Accel Energy focus solely on its baseload power producing and the redevelopment of its sites as low-carbon industrial energy hubs. And on to the next important update, Rio Tinto traded in green despite declaring force majeure on customer contracts at its Richard Bay Minerals subsidiary in South Africa, owing to an escalation in the security situation at its operations. All mining and smelting operations at that minerals have been halted until further notice. Meanwhile, the Zolti South project has remained on full suspension since the security and community issues in 2019. Consumer and business finance provider Thorn Group traded in green despite the warning of material operating loss. The group has cautioned that it could have a material operating loss in the 2022 financial year if disappointing trends from the first quarter trading persist. The group highlighted the business battles intensifying competition and COVID-19 with a significant investment in strategy. Thorn also confirmed its net profit of $8.4 million and a 1 cent dividend for the year ending March 31st, which are audited results following the early release of preliminary figures. The company maintained its previously announced position of not providing profit guidance. And now it is time for another short break, but stay tuned, I'll be back with more trending market updates.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news.
We cover it all on our news segments.
Be on top of the latest news
with Kalkine TV. Welcome back. This is Holly, your host, live from Kalkine Studio, and you're watching The Opening Bell. Let's now glance through the ASX sectoral charter. Well, technology shares have been rising since the last few sessions. Today, the trend seems to be resuming on the ASX as the tech-heavy Nasdaq 100 marked an all-new high in the US, led by demand for technology shares. The Australian technology shares like Xero Limited, WiseTech and Nearmap are trading higher today. Meanwhile, the Australian energy majors such as Woodside Petroleum, Beach Energy and Oil Search are trading in the green after crude oil prices ticked up. On Tuesday, crude oil prices rose on the back of broad hopes for a demand recovery, and the comments from OPEC's Secretary General overshadowed travel restrictions due to the new outbreaks, also helping the fuel oil rally. And Brent crude futures were up 0.4% at $75 a barrel, recovering after a 2% fall on Monday. West Texas Intermediate crude futures rose 0.4% to $73 a barrel as well. And moving on to the miners space, heavyweight miners BHP, Rio Tinto and Fortescue are trading in green amid a Chinese commodity crackdown. On Tuesday, iron ore futures fell, weighed down by steel demand in China, reverting to a lower level due to the threats of intervention by the Chinese government seeking to put a leash on high prices. The most active September futures contract for iron ore on China's Dalian Commodity Exchange closed 2.7% lower at 1,153 yuan, or $178.57 US. That is per ton after 4 straight sessions of gains. Meanwhile, copper prices also fell for the 4th consecutive session on Tuesday as surging COVID cases strengthened the US dollar and cast doubt on a speedy recovery for some economies. In addition, the plentiful supply of industrial metal also weighed down on its price. On that note, ASX listed copper players Oz Minerals and Sandfire Resources traded in green during the early hours of trading today. Then in the yellow metal space, Newcrest Mining, Ramelius, Evolution and Northern Star Resources are all inching lower. Looking at the gold prices, they've seen a fall to their lowest level since mid-April of this year, and the US dollar gained ahead of this week's US jobs report, which is expected to add new jobs and could cement the Fed's recent hawkish stance. Well, that is just about all in our show for now, but stay tuned and I'll be bringing you more stock updates in our upcoming shows.